Hi everyone, as we approach the holiday season, we wanted to give you a reminder about some of our annual events coming up. We'll be doing our holiday drop box for Project Heartbeat again this year, collecting donations of toys and clothes for our homeless youth, as well as our annual open house for Christmas on December 12th. We'll be sending out more information as we approach these dates. Thank you.
Hey everyone, here are some quick updates on recent happenings and economic indicators that we keep a close eye on. Headline inflation dropped to 2.9% in the month of August, falling below 3% for the first time since March of 2021. Consumer confidence rose to a 6-month high as expectations for a recession fade. The unemployment rate rose in August to 4.3%. This is a little concerning, but the silver lining is that it further gives confirmation to the Fed that it's time to cut interest rates. Total retail and food services sales rose at the fastest pace since January of 2023. The Bloomberg Aggregate Bond Index rallied for the 4th straight month, with the longest streak of gains since July of 2021. The 2-year Treasury yield declined to the lowest level since May of 2023. The yield curve, which is 10-year less 2-year, nearly uninverted for the first time in 2 years. That's very important. The S&P 500 rallied for the 4th straight month. Small caps continued to underperform. Commodities declined for the 3rd straight month and fell intra-month to the lowest levels since 2021. Crude oil fell intra-month to the lowest level, $72 per barrel, since January, and average gasoline prices fell to $3.35 per gallon. The US dollar declined for the 2nd straight month and fell intra-month to the lowest level since July of 2023. Overall, while we're seeing some weak spots in the economic data, things are continuing to set up for a rate cut later this month. This should have a positive impact on fixed income investments almost immediately, and eventually will trickle down to the stock market, although sometimes that does take a little bit longer to play out. As long as the US can avoid a recession, we feel like we're in a good place for positive results over the next year. I don't feel like I would be giving a good update without mentioning the presidential election. Regardless of which side of the aisle you favor, keep in mind that historically the market has cared much less about who is president than who controls the House and Senate. The market also prefers political gridlock, so if we end up with a divided government, while that means a lot of policy might not get accomplished, it should mean that the market will remain less volatile, as we can generally expect less changes that will have a major impact on businesses. At the end of the day, I will say that we're keeping a close eye on all the data and the elections, and will continue to make adjustments to portfolios as we see necessary. If you do have questions or concerns, don't hesitate to reach out, as we're here for you. Take care, and we'll talk soon.